but the other issue, with a lot of the market cap weighted indices and how a lot of these things work, particularly when individuals allocate to international, it's generally by a market cap vehicle, an index fund. International markets are still dominated by financials, industrials, healthcare, these businesses that are particularly financials. I mean, financials, I don't think it's a secret, internationally have done quite poorly since the global financial crisis. And they're dominated by a lot of these kind of old world companies, if you will, and they don't have the heavy tech exposure. I mean, EFI, so that's, developed countries, non-emerging technologies, less than 10% of the index. It's, you could argue it's too much in the US, it's almost 30.
You're talking about the technology weighting for the S&P 500 is almost 30?
Correct.
Yeah. Okay.
Yeah. Yep. So it's interesting. I think that's a big reason why, international stocks, just to drive home the point, where those businesses or the revenue streams of those businesses aren't as relevant as some of the businesses in the US.
Yeah. And that's this is a point that's been being made for the last 10 years, at least, because started my career roughly 10 years ago. And since then, everyone has been talking about one reason to pile into international stocks is the valuation. Oh, look at the valuation gap of international stocks versus domestic stocks. Look, it keeps getting bigger and bigger. It's never been this large. Now is an opportune time to buy. And while that might be one way to think about it, the other way to think about it is, to Matt's point, financials generally fetch a lower valuation. And if you've got a sector like financials that constitutes a dramatic portion of international benchmarks and indices, that's going to have an impact on the valuation. And to be quite honest, that whole valuation argument really hasn't played out, come to fruition. And I'll just take it back to what I said before. The innovations coming out of the US, people are willing to pay up for innovation because it drives earnings growth. And it's not happening as much in the international markets as it is for companies that are based domestically.
Yeah. And, I think you go back to a time like 2020, COVID, everything going down. I mean, international provided almost zero diversification benefit. If anything, international was down more than US stocks. So if you're not getting diversified to the downside and it's underperforming to the upside, it really becomes a tough proposition to want to be overweight or even market weight international stocks.
Right. Yeah. How do you define diversification, right? If it doesn't provide some level of ballast or move differently than the rest of your portfolio, then that's not diversification.